when it comes to the FMCG industry. So he was the former finance director of Bachelors and former CFO of Valeo, and presently runs his own sort of accountancy firm specializing in this area, amongst others. And as I mentioned, is a director and company secretary of Love Irish Food. So today, Aidan has numerous topics. I know that he mentioned that can be, just another couple coming in. He has numerous topics that he can speak on. And this actually is normally a very long talk. So he's going to give us a whirlwind chat through his presentation. So I'm going to hand it over to you now, Aidan.
Thanks, Andrea. Yes, so Aidan Byrne's my name. I'm one of the founders of Love Irish Food back in May 2009. And in those days, I was the finance director and one of the main shareholders of Bachelors. So we had Bachelors and Squeeze and Aidan and Lustre and Picnic, and we were a distributor for a lot of other brands. Soon after that, we sold our business to what was known now as Valeo Foods, and I took over as CFO of Valeo. And so I integrated the acquisition of Shamrock and Roma and Oslam's, and then I bought Jacobs for them, and then I'd had enough. So a number of years ago, I left and I set up, as Andrea said, my own consulting firm. So that puts me in an unusual position from the FMCG perspective, insofar as I have my own firm providing the usual audit and accounting and etc., tax services, blah blah blah. But I've actually ran some very large food brands and food companies. So we're fairly in a unique situation. So one thing I love talking about is to food companies is just keeping them, trying to make sure that they stay successful and stay afloat. Most people get involved in the food industry because of passion and love and joy and everything. And there is nothing, business has a great habit of turning that joy down fairly quickly. There's a standing joke about FMCG. How do you make $1 million out of FMCG? You start with 2 million. But this speech today, really, this talk, is to try and help companies to sort of protect themselves in terms of keeping going. So it's really all about cash. Now, cash is king. I'm nearly 40 years in business, and cash was king when I started off, and cash is king now. Ultimately, you will never, if you have cash, you could always keep going. Every economic transaction is only useful really when it's converted into cash. So how do we make sure that we protect and maximize our cash? Having enough cash means that the founders, particularly for small food businesses, they set out with all these great ideas. Cash enables the founders to achieve their own goals. So before we find out how to protect it, let's just have a little bit of, just for a couple of seconds, what happens when you don't have cash? Well, if any of you have been running a business which is short on cash or gets short on cash at any time, you all know what that means. Every day is a firefighting day. You don't end up focusing on your brand, on developing your brand. You focus on just firefighting and keeping everyone happy with the limited amount of cash that you have. You've built a lovely set of products using all the best ingredients. You start running out of cash. Usually you fall out with a couple of your suppliers. Then you have to start compromising quality. Oh, geez, I may save a few quid here. I'll use cheaper ingredients. All of a sudden, what happens is your product the quality gets, which you've been known for, quality starts to deteriorate. People aren't as happy. You started having scrambled thinking because you go, oh, maybe I'll do this, maybe I'll do that. It's not the way you want to be doing business. You want to spend your time developing your business, growing your business, marketing your business, making sure your business succeeds, and yet you spend every day worried about how much money is in the bank and how close you are to your overdraft limit. And all that happens is your thinking gets scrambled, and ultimately lack of cash, unfortunately, does lead to business failure, which I've seen, unfortunately, quite a number of times. And it's more people didn't do early what they should have done. One thing to remember about cash is people say, well, when do you go talking to your bank and stuff like that? Believe it or not, the best time to go talking to your bank is when you've got loads of money. I know that sounds counterintuitive, but if you've just gone and raised money, or you've gone and brought in a new investor and you've lots of money in your bank account, that's when you go to your bank and you say, do you know something? I want to make sure that I'm happy with my facilities, whether I have an overdraft or whether you're going to provide me with loan finance if I want to buy an asset. You do it when you have loads of money. You don't do it when you've got no money. If you go into a bank as you're running out of money, trust me, you don't get a great response. You go into a bank when you have loads of money, you have a much better chance of getting a favorable response. So that's something people need to get into their heads. So how else do we maximize our cash? Right. Well, how do we get cash? We sell stuff to people. We sell product or services. Mainly in FMCG, we're selling product. So we sell products to our customers. So our customers are our debtors. They owe us money. So how do we maximize our cash? The first thing is we bill promptly. There's no point in you sending out your product this week and getting a POD back and then say, geez, do you know something? I'm really busy. I'll do the paperwork at the end of the month. The clock only starts at your customers when they receive your invoice. So if you send something out today on the 28th of February and then don't send the paperwork and don't bill them until the 20th of March, the clock in their perspective only starts on 20th of March, not when you've actually delivered your product. So bill promptly is number one. Number two, bill accurately. You sent out 100 cases of product X. Make sure it's 100. So if you've got a POD with 99 and you send the bill out for 100, trust me, you won't get paid. I've dealt with all the major retailers for many, many years. And it's not that they'll pay you 99 and argue about the one, they won't pay you at all until you've given them the credit note for that one case that never showed up or that fell off the lorry or whatever. You don't win those arguments in most cases. So if you think you've delivered 100, they say you've delivered 99. The truth is you'll probably end up writing the credit note for the one, and you won't certainly get your money for any of them until you've done that. Every one of you have credit terms. So your credit terms on your invoice. Make sure you understand what that credit term means. Because if you have on your credit terms end of month following, which is a quite common one. So this, what day is today? Wednesday. So this Friday is the 1st of March. So if you credit terms of end of month following, you will send out your goods on the 1st of March. And under your terms of trade, you'll be paid on the 30th of April. It's a long time away. So it's an average of 45 days. Obviously, if you'd also get paid at the end of April on something you built on the last day of March. But remember, if your terms of trade are 30 days from date of invoice, that's plus 30 days. If they're 15 or 14 or whatever, understand lots of companies go and they do things like, oh, we'll set up end of month following. Trust me, you're not getting that amount of credit from your suppliers. So make sure you understand what your own credit terms are on that lovely piece of paper, which is your invoice. Now, before you sell stuff to people, remember, selling is great, but it's only great when you get the money. So make sure that you have credit check procedures for any new guy comes in. As I said before, I owned a lot of brands, but we also distributed other people's brands. And one of the brands we distributed was Fox's Biscuit. And at Christmas, loads of these white van men would contact us saying, could you sell me two containers of Fox's Biscuits that they would sell out the back of the truck at farmers markets and stuff like that. And it was a lovely, but we would go and check them, and in their cases, we would get them to pay up front for the biscuits. I did not want to be chasing some lad in a white van all around the place. So make sure if a new customer, it's different if Super Value or Glun's or Tesco or Lidl or Aldi come and say to you, we'd like to buy your product. To be fair, they're unlikely to go bust, though I'm old enough to remember when Super Quinn did go bust, and I'm even older to remember when H. Williams went bust in the 80s. So it does happen that the big guys go bust, not often. So, but have credit check procedures for your little guys and have credit limits. There's no point in not putting a credit limit into your system. So if you sell 1,000 quid's worth of stuff to somebody every month, so 12,000 a year, obviously your credit limit will be greater than 1,000 because if you don't want to literally put them on stop immediately. So you're probably talking about, if they did 12,000 a year, you're probably talking about a credit limit of probably around the 2,000 mark. Which enables them to get a second order off you in case the paperwork is as expended. You might go for the aggressive line, which is basically just to give them 1 month's credit. Some people will go a little bit more, but don't have a figure of naught because your system then won't stop selling to them if they've bought a lot of product and they haven't actually paid. So at the end of every month, you will then end up, you sold all this great product, and your accounting system, and trust me, every accounting system will have an age debtor analysis. So loads of people will owe you money. Actually, it's a good idea to read that. And I know a lot of small food companies, and they don't actually read it. And they don't spend too much time looking at the report. The report might say that Johnny Blogs now owes me 5,000 quid for 3 months. Well, why have it gone 3 months? We don't know. But you need to be getting on to Johnny and saying, Johnny, in a nice way, Johnny, I'm going to need you to pay up, or else I'm not going to be able to supply you with any more product. It's very important, though, that you develop a rapport with the people who's paying your bills. So it's not a good idea to go and become like the big, you know, ringing up or sending solicitors letter or ringing up demanding. Be nice about it. Try to be the person that if they're going to pay 10 people, if they're struggling with their money and they're going to pay 10 people every week, make sure you're one of the 10. Be nice, develop a nice rapport with them. You know, I used to always get my teams in when we were bigger, you know, to make sure that we weren't the bad guy. That you always were the people. They're nice people. They don't, you know, that we're firm but fair. Is the word is the way I look at it, and do it in a nice way. Process credit notes if you have to. As I said earlier, if you've got a situation where you where there's an issue where you haven't been paid, you ring them up and they say, sorry, we disagree with what you sent us. Make sure you process that credit note quickly. Otherwise, you ain't getting paid at all, or until that's sorted out. So that's really sort of debtors. That's really more you know, people selling it. So what other are the elements of your cash flow? Okay, our old friend stock. You buy stock. Just say whether it's raw materials, packaging materials, or finished goods. And you have to, big thing about stock is you have to trade off the cheapest price with the most economic quantity. As I said at the start, we used to be the owners of Luster didn't can fish. We didn't can the fish ourselves, and actually we brought it in from abroad fully canned. But you could only get the fish in once a year. There was a harvest, it only came in once a year. So we had to buy 12 months of the fish and then sell it over the following 12 months. Now, we were lucky, we were a very big company, we were able to do that, but that's a big holding cost to have some stock sitting in your warehouse for months after month after month before you can sell it. So always trade off. If somebody says to you, I'll give you a cheaper price, but you have to buy a higher quantity, always trade off whether the importance of that cheaper price with the fact that your cash is gone. Now, you've paid him, your cash has gone out of your bank account, you've paid him, and you've all this stock, whether it's raw materials or packaging materials or finished goods, sitting in your warehouse, costing you money and potentially going bad or going out of a saleable condition. Now, one for, I'm not sure if too many of you on here are marketeers, but I always tell my teams, for God's sake, use all the stock before you start changing your printouts. So somebody comes in with this beautiful new logo or whatever, and you try and use up all your packaging stock. And for a small company, there's nothing worse than writing off a shed load of packaging stock because somebody wants to change either the label or whatever. It's a killer for small companies when they go to change their labeling or whatever, and all of a sudden they've all this stock and it's worthless because it's under the old process. So make sure you try and use as much of it as you can before changing. And then obviously the third part of cash is your suppliers, and it's very important that you understand their life. And I'll give you something that we did in Bachelors. Now, this shows how old I am. When we bought Bachelors, most things were done by check, not by electronic transfer. And the day we bought Bachelors, off our UK owners, I got on to our accounts payable person. I said, I want you to do something for me. I want you to draw a check on everything, every penny that we owe at that point in time. But draw the check. And I want you to give me those checks. And I'm going to use the checks as a footstool. And I'm going to only give these checks out when people are demanding it. So the first guy obviously might have been the local van driver who effectively you were his employer, even though you weren't his employer, and that was effectively his wages. And he's in after a day or two going, where's me check? Where's me check? And you went, oh, okay, here you go, Johnny, there's your check. And every couple of days, so all these people would come in and they'd get on to the people looking for their checks. They'd come into me and I'd say, there you go, there's the check, happy days, move on. And as the days go on and the weeks went on, obviously the check pile went down and down and down. But I noticed it hadn't gone down to the bottom. And then after about, say, 5 or 6 weeks, I looked at the checks. And a lot of the checks down the bottom were my big suppliers. And we had not become a problem for them yet. Now, our system, I'd drawn the checks immediately, but our system might have had that we were to pay them every 30 days. But here we were 6 weeks later, 7 weeks later, and they still hadn't demanded their check. They still hadn't threatened to cut off supply. So all of a sudden, and then we waited, and then a guy would ring up, or a girl would ring up our office and say, you haven't paid me for me December stuff. Oh, God, sure. Geez, sorry about that. We forgot that. Out came the check, it in the post, it go. We saved about 20 days credit on all of our big guys, on a lot of our big guys. That actually saved us about 2.5 million quid's worth of cash. A week or a few weeks after we had, there's cash we still have to pay out the fullness of time. But instead of paying it out this month, I'm paying it out 6 weeks later. And so understand the pressure of your suppliers on you. Understand where, so, and you can use that. Possibly say, well, wait, I'll just wait to see until they start. Now, obviously, that's a really fine balancing act, because you don't want to get into such a bad book so they cut off your supply. And you don't want to get in, but it is a balancing act for you, particularly if cash flow is tight for you. And you say, right, I'm just going to check how far I can go with these things. I'm not talking now, you'll notice I'm not talking about cash flow and talking about screwing the revenue and stuff like that. That would be for the advanced course, and it's not something I advise. Like where you say, well, I'm not going to pay over my PAYE and my PRSI until, for a while. That's sort of the advanced practical course, and you won't hear me really, advising it, but it is, it is unfortunately the facts of life. So really, before I finish, I'm just looking at time. I'm getting near the end, but we've got to say, understand your cash flow. Oh, everyone works out a budget, but do you work out a budget that's just on profits and losses? Or do you work out a budget that also is your cash flow? Because they're not the same. You might buy something in January and you might use it for 4 months. Your profit and loss has you selling it in equal quantities over the 4 months, but your cash flow doesn't, because you paid for it back in January. So make sure that you have a cash budget as well as your profit and loss budget. Because remember, your component parts will go up and down. There will be peaks and troughs, and make sure you can finance that. Every business should know where it is in the year that they're going to be the most strapped for cash. Back to my argument, my point at the start, if you know that 9 months out, you can then go to your bank and say, do you know something? I'd like to arrange a stocking loan facility. And they'll say, but sure, I'm looking at your bank account, you're fine. And you'll go, yes, but I want to arrange a stocking loan facility, because you know that in September, you're going to be very strapped. So you arrange your facility now when your cash is quite good. And then it's there you've contractually agreed with the bank that they'll provide you with a stocking loan. And therefore you utilize that when you need it, when your cash is short in the autumn. So have your cash budget and monitor it. One thing that I hate when I advise people is, some people are very good. They do all these great budgets and plans. They put them in a lovely Excel spreadsheet. They sit there, and what happens? It sits there for the whole year. They print it out, and it gathers dust. Monitor it. Make sure, how am I doing against it? It has something happened that has changed my plans in regard to cash. We talked about the cash budget. Has the price of something gone up by so much that it's actually, I originally thought something was going to be 50 cents. It's now €1. So my cash flow budget has to be amended. So make sure you amend your cash flow budgets, which now it ceases to become a budget and now becomes a forecast. Make sure you do that on a reasonably regular basis. Because as I said, there's nothing worse from a food company's perspective that you come in the morning and the only thing you're talking about is how to keep the place alive. You should be thinking about, how am I going to get new customers? How am I going to get my brand better? How am I going to improve the quality of my product? Not how am I going to survive the day and keeping cash alive. So, Andrea, what am I doing for time?
I think we're up. You've done
that's what I thought. I have a load of these little, and so and I'm going to send Andrea the slides, which will actually include 3 of these little vignette speeches. One which you've just done on cash, the second one is on information, and the third one is on people. And I think there's a couple of other ones on fundraising. And I'm going to send Andrea these slides. They were from a conference that I wrote for Super Value on the Food Academy Advanced program, because I used to be the main mentor on that back in the day, by 2015. And you know, you might say things have changed. Things don't in financial terms. A lot of things don't really change. The things that are important, good financial controls, good cash, are still the point. So I'm going to send this to Andrea.
Yeah.
Andrea, you're welcome to send them on to everybody.
Thank you very much. And if there's any questions,
if they want any more, if they want me to give those other 2, then I would be gladly, and I can do a few more if they want. If any of them want to contact me privately, and my details will be on it, it's aidan@obk.ie. And if anybody thinks that I might be able to be of use to them in their business, I'll certainly often go down, and I usually give my first come to Jesus session, as they say. It's usually free, where I'll come and have a chat with you and find out what things are like. And then we can see if there's anything that we can be done beyond that. If anybody got any questions now, or email me questions if you don't want to.
I was going to say, if anyone has any questions, you can pop them through to me, and I'll put them on
absolutely.
And people up. That's no problem at all.
Send them through to me. You know, any questions really. Like, we're not. You're probably all used to dealing with, or some of your team are probably all used to dealing with your own accountants, but I can probably guarantee, as food accountants, we're probably very different. Yeah. We tend to think very differently.
I certainly know Aidan keeps Love Irish Food on as a not-for-profit on the very straight and narrow, and is absolutely.
No, that's actually the easy one. that because we actually do a cash budget every year, so we make sure that we don't spend money we don't have.
So
and thank you all for being members. Sorry, on behalf of Love Irish Food on the board, since I've been a board member for so long, thank all of you for becoming members of Love Irish Food, and I hope you get good benefit for your membership. I think you do, but if there's anything else, obviously, that you feel that you'd like, let us know through Andrea or Kieran, and eventually it'll come through to ourselves at the board level. We meet every month, just to make sure that things are going good.
We do. Listen, thank you everybody for joining, and we will look forward to another session in a couple of months' time. Thanks, everybody. Thanks, Aidan.
Bye. Thanks very much. Thank you.
Bye.
Thank you.